Welcome back to the channel, and thank you for joining me. I'm Algabot, your guide through the world of automated trading on MetaTrader 5. Today we're taking a close, educational look at an expert advisor called RSI Range Breakout. This one has an interesting twist. It uses the Relative Strength Index, and only the Relative Strength Index, as its signal engine, but not in the way most people expect. Instead of buying when it reads low and selling when it reads high, it treats the RSI line itself as a range that can break out. Stick around, and let's explore exactly how it thinks. So what exactly does this expert advisor do? At its heart, RSI Range Breakout is a momentum and breakout system. It watches a single indicator, the Relative Strength Index, which measures the speed and strength of recent price moves on a scale from 0 to 100. Most traders use RSI to spot stretched conditions. This strategy does something different. It records the RSI value of every closed bar and builds a rolling history. From that history, it draws a box. The top of the box is the highest RSI reading over a recent window of bars, and the floor of the box is the lowest reading over that same window. In effect, the indicator builds its own little range, a snapshot of how momentum has been behaving lately. The core idea is that momentum tends to coil before it expands. When RSI spins a stretch of bars oscillating quietly inside that band, pressure is building. The moment RSI breaks decisively through the top or the bottom of its own box, the strategy reads that as a shift in gear, a sign that order flow has changed direction. It then lets the indicator pick the side and aims to follow the release. This approach is designed for liquid, trending instruments. The notes suggest pairs like the British pound against the US dollar or gold against the dollar on the 15-minute or 30-minute time frames, where clean momentum moves are common. It's best suited to traders who are curious about breakout and momentum styles and who prefer structural, rule-based logic over discretionary guesswork. Remember, this is educational information only, not financial advice. And like every approach to the markets, it carries real risk, and losing trades are a normal part of the picture. Let's walk through the exact logic step by step. The expert advisor only acts once per newly closed bar, so it isn't reacting to every flicker of price. On each new bar, it first runs a few housekeeping checks. If a position is already open under its magic number, it stands aside and lets the existing trade play out. If the current spread is wider than the maximum allowed, it skips the trade entirely to avoid poor entry conditions. Next, it builds the RSI box. It takes the previous 20 RSI readings, by default, and finds the highest and lowest values among them. The highest becomes the box top, and the lowest becomes the box floor. The RSI of the bar that just closed is then compared against those edges. For a long signal, two conditions must both be true. First, the current RSI must push above the box top by at least the breakout margin, which by default is 2 RSI points. This makes sure the move is decisive and not just a whisker over the edge. Second, the RSI must be in genuinely bullish territory, at or above the bull threshold of 55. That second gate is important. It stops the strategy from mistaking a small bounce off a low reading, say RSI climbing from 20 to 35, for a true upside breakout. A short signal is the mirror image. The current RSI must break below the box floor by the breakout margin, and it must sit in bearish territory, at or below the bear threshold of 45. Now for risk management, which is entirely structural. Rather than using fixed pip distances, the strategy looks at the recent price swing over the last 10 bars by default. For a long trade, the stop is placed just below the lowest low of that swing, with a small buffer added as a fraction of the swing's height. The thinking is simple. If price falls back below that swing, the breakout has failed, and the trade should be closed. For a short trade, the stop sits just above the highest high of the swing. The take profit is then set as a fixed multiple of that stop distance. With a default reward ratio of 1.8, the target sits 1.8 times further away than the stop. From there, the structural stop and the target manage the trade to its conclusion, with no further intervention needed. Let's look at the actual MetaTrader 5 code on screen, just as you'd see it in MetaEditor. At the top are the input parameters, the dials you can adjust. RSI period sets the smoothing of the indicator, here 14. RsiLookback, set to 20, is how many prior RSI readings define the momentum box. Breakout margin is how far RSI must clear the box edge to count as decisive. Bull threshold and bear threshold, 55 and 45, are the directional gates. Stop loopback and stop buffer frac shape the structural stop, and reward ratio sets the target as a multiple of risk. There's also a spread filter, a lot size, and a magic number to tag the trades. Now the two signal blocks. For the long side, look at the Boolean called broke up. It's true only when the current RSI is greater than the box top plus the breakout margin, and the RSI is at or above the bull threshold. When both are true, the code reads the ask price as the entry, sets the stop just below the recent swing low minus a buffer, measures the risk as the distance between them, and places the take profit at the reward ratio times that risk above entry. Then it calls trade.buy with those stop and target levels. The short side is the exact mirror. The Boolean breakdown is true when the current RSI is below the box floor minus the margin and at or below the bear threshold. The entry is the bid price. The stop sits just above the recent swing high plus a buffer, and the take profit is placed the reward ratio times the risk below entry. The code then calls trade.sell. Both sides share the same structural, self-scaling logic. Now let's bring it all together on a chart and watch the strategy work through one long trade and then one short trade. On the upper panel, you can see the price candles for a pair like the British pound against the dollar, and on the lower panel sits the relative strength index, our single indicator. I've marked two important levels on the RSI panel, the bull gate at 55 in green and the bear gate at 45 in red. Watch the first several candles. Price is drifting sideways in a tight range, and notice what the RSI is doing underneath. It's oscillating quietly, ticking up to around 53, back down toward 45, then up again. This is the strategy quietly building its momentum box. The highest of those recent readings forms the ceiling of the box, and the lowest forms its floor. Nothing is happening yet, and that's exactly the point. Momentum is coiling. Then comes the breakout. On the seventh candle, price moves upward with a strong bullish bar, and the RSI leaps up to around 62. Look at what just happened on the indicator. RSI has pushed clean above the top of its recent box, clearing it by more than the breakout margin, and it's now well above the bull gate of 55. Both conditions are satisfied at once. The strategy reads this as momentum expanding to the upside, and the buy entry triggers right here. At the same moment, the stop loss is tucked just below the recent price swing, beneath those quiet candles, because if price slips back down there, the breakout has failed. Now follow the trade. The next candle continues higher, and the one after pushes up again, with RSI riding in strong territory around the high 60s and into the 70s. Price reaches the take profit level, set at 1.8 times the stop distance above the entry, and the long trade closes at its target. That's the breakout idea in action. A quiet range, a decisive push, and a move that follows. After the take profit, watch how price settles into a new sideways drift. RSI eases back down from the 70s, cooling off toward the mid-50s and then the high 40s. Once again, the indicator is oscillating within a fresh band, building a new box, this time from the recent highs and lows of that pullback. The strategy is patient. It simply waits to see which edge breaks first. This time the pressure releases to the downside. A heavy bearish candle appears, and the RSI drops sharply to around 38. Notice the conditions for a short. The current RSI has broken below the floor of its recent box by more than the breakout margin, and it has fallen below the bear gate of 45 into genuinely bearish territory. Both gates are met, so the sell entry triggers on this candle. The stop loss is placed just above the recent swing high, because a move back up there would tell us the downside break has failed. From here, price follows through. The final candle extends lower. The RSI sinks further into the low 30s, confirming that momentum has shifted and price reaches the short take profit, again set at the reward ratio multiple of the stop distance below the entry. The short trade closes at its target. So across both trades you can see the same repeating rhythm. RSI coils inside its own range, then breaks out decisively through one edge while in agreeing directional territory. The strategy enters in the direction of that break, and a structural stop and a fixed reward target manage the rest. Of course, not every breakout follows through so cleanly. Some fail and reach the stop, which is why disciplined, structural risk control sits at the center of the whole design. And that brings us to the end of our walkthrough. Today we explored RSI Range Breakout, an expert advisor that uses the Relative Strength Index alone, treating the indicator as a range that can break out rather than a simple high or low reading tool. We covered how it builds its momentum box, how the bull and bear gates filter the signals, and how its structural stop and reward-based target manage every trade. Remember, everything here is for educational purposes only and is not financial advice, a recommendation, or a solicitation. Trading carries real risk, and losses are a normal part of the journey. If you found this analysis helpful, please consider liking the video, leaving a comment, and subscribing for more MT5 strategy breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.